If I wanted to become an accountant, I didn't need to go to university. Things weren't just given to you, definitely financially struggling. So I had to think, well, actually, if I want something, I can't rely on my mum to get it for me. I had to find a way. Each different stage of my life, whether it was selling sweets, whether it was, even as a 16-year-old, I was doing car boot stalls. When you come from people that are either kind of middle class or actually rich, they don't have that hunger to really earn more money a lot of the time.
Hello and welcome to Property Investment Blueprint Podcast. I am with Joshua Tharby. Joshua Tharby is one of the best tax accountant out there. I've been seeing him on socials, posting and engaging people. I thought probably it's best to have you on our pod. So welcome to Property Investment Blueprint Podcast, Joshua.
Absolutely appreciate the opportunity to be here. Thank you very much.
You're very welcome, bro. You're very, very welcome. Before we start this interview, our audiences would like to know what is your contact from earliest years that I need to understand who Josh is.
Yes, that's a good question. So in terms of, earlier years, so it depends, how far should we go back?
Tell me, bro. We want to know you, bro.
Yeah, so I suppose we'll go all the way back to school, kind of classic.
Yeah.
I've always been that entrepreneurial kid. Now I've grown up and I see that every school has that kid who's selling sweets at school, taking them in the backpack. And in my school, that was me. So going in, Mars bars, cans of Coke, literally just selling that at school, doubling my money. I was making 50 quid a week whilst at school. So I've always been entrepreneurial.
Yeah.
And then really that's just kind of flowed through school, and it's kind of that led me to accountancy because I have a good business idea of my own. I thought, I don't know what to do. So actually, let's do the second best thing. Let's learn accountancy, which can be a great business as well, I've now found out. But actually, you're inside, you're learning how to run a business, you're learning those skills. So that's what led me to accountancy. And then, we literally kind of went through the ranks of accountancy, specialized in tax, property, international stuff. And now we've got a couple of different businesses all around the world that basically help people pay less in tax fundamentally.
Wow, that is beautiful. So so you're not just an accountant per se, you're also an entrepreneur and business person. You see, we all have that epiphany moment. One of the thing that really gets us to do what we're doing. So for you, what is that one thing that really triggers you to do what you're doing right now?
Yes, I guess there's two ways. I suppose I could say the kind of altruistic answer and say I really want to change the world. I love helping people pay less in tax, and certainly that is part of it. But another great thing is why we do it all is because it's fantastic money. And they kind of what we're doing, we are helping people. Absolutely, that's great. But actually, it enables me to live a fantastic lifestyle, to travel all around the world, business class, first class, private jet, wherever it might be. And that really is why I do it, because I like the nice things, and they're not cheap. So a business is really the only way to actually get that for yourself.
Wow. So what at your young age, you said you used to sell sweets. So how is living home with parent like when you're young? Is it were you struggling financially, or were you kind of okay but you wanted more? So how was your childhood like? How was your childhood frame you to be who you are now?
Yeah, so in terms of childhood, it's almost like kind of a classic case now, really. Single parent household. So no dad around, just mum who was, poor, three sisters. So it was a case of actually, things weren't just given to you, definitely financially struggling. So I had to think, well, actually, if I want something, I can't rely on my mum to get it for me. I had to find a way. It's almost, out in the wilderness, you've got to find a way to do it. So each different stage of my life, whether it was selling sweets, whether it was, even as a 16-year-old, I was doing car boot stalls, selling kind of all these different things, doing market stalls. I just kind of thought, okay, what's the opportunity here to make some money? And that's just always what I've done, whatever stage I'm at, because fundamentally with money, and no one's going to give it to you unless you've got rich parents, which I didn't have. So it's a case of, if I wanted it, I needed to get up, go out there and get it.
Fantastic. So what role the lack of money in your household growing up have shaped your view about money today?
Yeah, I'd say especially what I've observed when kind of working with and having relationships with people that come from wealthier backgrounds is actually when you come from people that are either kind of middle class or actually rich, they don't have that hunger to really earn more money a lot of the time. Obviously, small portions you do, but a lot of the time, actually, they kind of have that attitude that money is fine and you don't kind of need to go out and earn it. It's just kind of given and it's there. And there's no hunger. Whereas actually, because we grew up in a kind of relatively poor household, I've always just wanted to have money, basically. I've wanted to make sure that I never have to think or worry about money again. And that's just the constant driving force behind it.
Wow. Amazing impact that is. So thanks for sharing that with us. So how about school? How is school like for you?
Yeah, so at school I wasn't very good at school, to be honest with you. So I used to kind of flunk out a lot. Barely just got past my GCSEs. So I'm sure a lot of people are thinking this, well, how do you manage to get like a C in GCSEs, failed his English? Can this guy be an accountant? And, this at school, I didn't try hard at all. I was just focused on kind of, getting by, making some money, doing what I was doing part-time. And that was really it. I didn't kind of take it seriously. I didn't realize the importance that education had. But then what happened is I managed to just about scrape through my GCSEs. So they allowed me to go into A-levels. And that's kind of when I almost had a light bulb moment. I really started to apply hard, try myself. So in the end, I ended up going to university and I got a first-class degree and then also distinction, a master's degree as well from University of Leeds. So it's a case of, well, actually, I know now that when you apply yourself, you can do it, because to go from barely passing all your GCSEs to first-class degrees, obviously that's a lot harder.
Well, I really do understand that, because my background is accounting as well. So I did finance and accounting at uni. I went to Bournemouth Uni. I hardly passed my GCSEs myself, so I had to go through BTEC. So I do understand how people can think, okay, how were you able to become an accountant? Because when you talk about accountants, people are thinking about maths, calculations. All these things are really, really hard to do. So I do understand what difficult you may have faced as well to actually get a first-class degree, from having a C grade to first-class degree. But what are your thoughts about going to uni, getting a degree, and following the traditional way of acquiring certifications or qualification? What are your thoughts about that?
Yeah, I suppose it depends on what job you want to do fundamentally. Even if I wanted to become an accountant, I didn't need to go to university. You can do an apprenticeship. You can do it without accumulating £100,000 worth of student debt. You can literally earn on the job as well. So I would say I enjoyed going to university, but that was from the social aspects. Enjoyed, going out, getting drunk 3-4 times a week, partying. But actually, if I were to do it again, I wouldn't have gone to university. I'd have saved myself the money, started earning more, got practical experience from day one in an accountancy firm, whatever else I was doing, because that was 3 years and about £100,000 wasted effectively, when actually you do an apprenticeship, they'll pay you to do the qualifications for them.
Yeah, absolutely. I do relate to that. To be honest, like lots of people I've interviewed in our podcast kind of go to the similar direction. Some of them said, oh, if you're a doctor or you are a surgeon, perhaps you want to go to uni. If you want to be an entrepreneur or a business person, perhaps you want to get someone to mentor you, guide along. Like apprenticeship could be one of those as well. So I really, really resonate with that. So that is a good point to put out there. So your journey about becoming an entrepreneur, I read a story about you saying you used to flunk at school to watch Homes Under the Hammer. How is that influence you to become a successful entrepreneur as you are now?
Yeah, so actually, it's all related to the money side of things, especially, obviously now I've been in property a while. I know it's not quite as sunshine and rainbows as it looks on Homes Under the Hammer. You're not going to walk into an auction, do the refurb exactly on budget within 8 weeks and make £50,000. It's not quite as easy as that. But that's what attracted me to it, was the entrepreneurial side of it, looking at, okay, Homes Under the Hammer, but actually, it was kind of crazy. Well, my teacher, who's teaching all year round, is earning £30,000, £40,000 a year. And here I've just seen on BBC that somebody's purchased a property at auction, got a mortgage on it, done some work and sold it within 3 months and made £50,000-£60,000. So it just kind of opened my eyes that you can make a lot of money in property. And that's what really led me, okay, we need to start a business, we need to start buying property. And that's what started me on that path.
Okay, brilliant. Thank you. I like that. And what are the biggest challenges you faced when you started your property investment journey? This is 2 questions. And your tax accountancy business, and how did you overcome them?
I'd say both. They're both the same thing. I guess it's anything. It's always the cost of ignorance, the skills deficit. You don't know what you don't know. And that's definitely the same in business as in property and anything else. And the way I overcome them was basically just finding people a couple of steps ahead, networking, and putting that conscious effort into do as much knowledge, basically become as knowledgeable as possible, network with others, and find people that are just a couple of steps ahead, so they can say, okay, yeah, watch out for that pothole over there, because if that wasn't in place, you are going to trip yourself up, especially in property, especially in business. The cost of the ignorance is massive, so you've got to kind of do as much as possible to plug that.
Absolutely. So how are you able to overcome this then? I know you said you got your mentors and coaches. I like the way you said a couple of steps ahead of you. That is a very key thing to do, because the massive mistakes lots of people do, they tend to find someone who's way miles away from them. For where they want to go. They're very good for inspiration. Don't get me wrong. They're very good, right? You can look at someone who's doing really well up there and say, whoa, I want to be like that person, or I want to replicate what that person is doing. But from my experience, if you really want to learn, look for someone who's like maybe a couple of steps ahead of you, as you just said, because they can relate to you a lot more than that person that are kind of maybe 1,000 miles away from you.
Yeah, exactly. So, because when they were in business and property, I guess the biggest lever you always have is time. The longer you're in something, the more successful, the greater returns you'll get. So especially if you go for somebody so far ahead, well, actually it might have been 10, 20, 30, 40 years ago when they were in the position you're in. And obviously the market, the technology, everything is so different then. So if you were to go to Elon Musk and say to him how to set up a VSL to sell your online product, he is probably not going to have a clue. Very intelligent guy, runs all his companies, but he's not going to help you with that specific problem you've got. Whereas if you go to somebody who's literally just did that and scaled that in their business 2 or 3 years ago, they will know exactly what to do and basically give you the shortcut to success.
Absolutely. You're absolutely right on that. So I really support that. Your journey is very inspiring to me and to a lot of people out there. What motivates you to shift from a 9-to-5 job to being your own boss and become an entrepreneur?
So it was always the plan. So even literally, especially when I look for this, is kind of what's powerful about the law of attraction and kind of how you kind of attract things in your life. Like as soon as I left university, I was kind of writing out, okay, we'll do 2 or 3 years working in an accountancy practice, get the qualification, get the trainings, then start and leave my firm, start my own firm. And that's exactly what I did. So it was a case of, I knew that I was never going to be an employee forever. It was actually, I was in accountancy, I was in tax, so I had to do the experience side to get the professional qualification sorted out. But it was always just a stepping stone, a temporary measure, because I knew that actually business was always the way to go.
Yeah, I like that, because I had the same perception as well. One of the reasons why I did accountancy is wanting to know how businesses run, how businesses operate, because it was fascinating to me. I've been thinking, how are this company making all this money? How are these people being on private planes, private, whatever they is, they're in these jets and doing all of that. That intrigues me. But when I get to finish uni and start working for people, that I thought I was corn or maybe lighter, because what I realized at that point was I could have actually become an entrepreneur, a business person, without going to uni, learning all this accountancy stuff. Because I could have either learned by being an apprentice, or maybe employ someone who's very good at it to do it for me, instead of me wasting 40 to 50,000 pounds doing that. So I kind of understand where you're coming from talking about that. But what would be your advice, or what would be your advice you could give to someone who is interested in starting either their property investment journey or their business, but might feel intimidated about the numbers, about the figures, or how to run businesses, tax, and all that sort of thing? So what advice would you have to people like that?
Yeah, I guess with that one, I suppose that's not really your problem to worry about, because in business, 99.9% of the time, you're going to hire an accountant. So your main role in business, especially just in the early stages, is making money, making sales. And off the back of that, of course, to make sales, you need a good product. And with the good product, you need to market it to get the sales. That's really what you should be focused on, the stuff that you can't really outsource to somebody very well. Whereas the good thing about accountancy and tax, a lot of the time you can just outsource that to an accountant who knows all the legislation, will help you pay less in tax, monitor the deadlines for you. And even bookkeeping, they could literally do all of it for you. So it's a case of, yeah, absolutely, you might be worried, you might be anxious, but just get a good accountant on board as soon as you can and let them worry about it. You focus on growing the business, hiring talent, marketing, closing sales, because ultimately that's going to be your skill set and where you're going to add the most value to the company.
Thank you for that. Really, really appreciate it. Let's talk about paying less tax legally.
Yeah.
Okay. So I'm about to start a business.
Yeah.
And I am okay. I'm doing really well for myself. I'm working for a firm, and I want to start my business. So what would be the best tax efficient way to start that business? Let's say property investment, for example.
Yeah.
So what would be the best way for me to start my business, knowing that, having tax perspective in my vision, in order to minimize the tax I pay?
Yeah, quite often, especially with business and property, quite often a limited company is still the best way at the minute. Of course, with property, a couple in your own name, if you only want a small portfolio, can be good. But for the vast majority of people that do want to grow and scale the business, a limited company is still the best way. And this is kind of where you can get tax efficient and have the best structures, where you might have a group structure. It's the kind of thing we set for clients quite often, where most often you've got a trading business, one that's generating cash flow. It might be a marketing agency, online courses, whatever it might be. That's your kind of main business that pays the bills. Or in property, that might be deal sourcing, rent to SA. It's the cash flow generating activities. You have that as part of the holding company. And then the second company that comes off of that is your property investment company. And because you've got that group structure in place, you can just move money around tax efficiently. You're not going to worry about taking dividends out personally to move it over to buy a property with. So that's the kind of structure that a lot of people, if you are looking to set up a good cash flowing business, buy a lot of property and build wealth, that's probably what they should definitely have on their radar.
Okay, good. So talking about group structure, suppose someone's got an online training business. Let's say maybe they have a GCSE training business, or they just have a training business, right? Is it ideal for them to set a company structure, a group structure that uses that training business, as you said, cash flow, in order to invest in create another company that would allow them to invest maybe in property, for example? How does the tax implication work? So what sort of benefit do they get from doing that?
Yeah, so that's the kind of main thing, is they get the money out of the trading business, because if you've got a lot of money, or you were to loan it from your trading business to your property investment company, that's risky at the end of the day. Anything happens, you sell the company, that money might need to be repaid back. Whereas if you've got that group structure in place, you just pay it out as a dividend to that holding company, that's completely tax-free. And then the holding company can then loan it down to buy a property. And then this kind of second best thing about having that group structure in place is, if you've got a trading business, that group that owns the company can actually sell that completely tax-free. So say, for instance, you start to build wealth with property, or relate to me, somebody comes and, hey, Josh, I'd love to buy your company off you. We'll give you £5 million for JSM partners. We know you've got enough real estate now, that's fine. So what would actually happen is that you would pay zero tax, because there's that group structure in place. The group owns the trading business. You could sell it, get the full £5 million cash in the bank without any tax, because you've got that group structure.
Right. Okay. So with that group structure, then, because I want our viewers to understand this a bit more. Suppose then you've got your GCSE training business example. It is cash flowing you, and you want to invest. You want to create another company that probably you want to start acquiring properties, so to say. So will you put it in form of a group structure then? So whatever the other company invested in that company, suppose say dividend, for example, is that dividend tax-free, or you'd have to pay tax on that dividend?
Yeah, that's right. So in that case, the dividend will go up to the group company tax-free. It's out of the traded business, out of harm's way, effectively. That's tax-free. But of course, if you were to then take dividends from the holding company, you would pay tax on that as a dividend, just as you normally would.
Okay, but as long as it's moving within the companies, there's no dividend tax on it.
Yeah, that's right.
Right. Okay. Suppose then you've got that company, you are making money, right?
Yeah.
And that company generates serious cash flow, right? And you know then with that money, if you if your year end, for example, comes in, you know, then if you haven't reinvested that much money, that some of that money you may get hit by tax, either corporation tax, or maybe if you want to pull out dividend to maybe pay yourself, right? So if you were to use that proceed, not say proceed, I'll talk about cash flow here, right? To reinvest then in the other company to acquire more assets, that then effectively means you've got less profit into the actual company, right? Do you get taxed for the investment you've made in the other company if it's not dividend?
Yeah. So with that one, it's because you'd always pay the corporation tax on actual trading profits of the business. So if you were to reinvest in property, usually that wouldn't qualify unless you were buying property in a trading business. You might get some kind of tax relief on it. So you'd pay the corporation tax, and then it would move over. So you wouldn't kind of get that. You wouldn't get that second tax benefit because HMRC, you only ever get that tax deduction on the investment when you actually sell the property itself.
Right. So basically, if you've got £50,000 sitting, just a small money sitting in your account, instead of having that as a profit, if you decide then to reinvest that in another business for obviously generating cash flow and also obviously building wealth, and then that then shows your net profit to be, let's say, 5K, for example, right? Do you pay then tax on the 5K or
it'd be the 50? Yeah, the 50K. So because that's what the business profits are, unless it was expenditure that relates to that business profit. Say, for instance, you go and buy a kind of new car, and you can get first full year allowances on it, then that's when you would wipe off the amount of profit in that company, bring it down to zero potentially. But loaning it across to buy property, that wouldn't be tax deductible. So it would be the full 50.
Brilliant. Okay, I like that. Really appreciate that. So looking at again technicality here a little bit.
Yeah.
Okay. So we have created that company and we have reinvested that. Obviously, we have paid whatever tax we need to pay. Okay. So that is clear, right? So obviously, you may be able to advise this on the others. It's no advice, right, based on your experience here. So in what way someone can really use their company on when it comes to expenses? How do we treat expenses when it comes to company? Because I know it's different to you, the individual, isn't it?
Yeah, that's right. So in terms of pretty much most expense you can actually claim for. The big one really that you can't is business entertaining. That's one HMRC disallow. So if you go and take some clients out, to the races, HMRC won't give you a tax deduction for that. But especially when it comes to company expenses, our rule is we always try and find a way to make that expense work for you as a business owner. So say, for instance, you wanted to go to Dubai. Well, actually, what's the purpose of that trip? Is it a business trip? Because a lot of people don't even realize this. We're going to go out, we're going to look at property, stay in Airbnbs, look at serviced accommodation out there. So actually, if you can find that trip has a business purpose and is going to benefit the business because ultimately you'll buy more property, make more money, pay HMRC more taxes, then it's only fair you get the tax deduction now on that initial expense when you're going out to Dubai in that case.
Okay. Because we have seen multimillionaires and billionaires doing that. Because I remember speaking to a multimillionaire once. He's got his private jet, and I was thinking, how are you funding all this, bro? He goes to me, but this is business stuff.
Yeah,
right? It's been bought through the business. Right. And I don't use it all the time. I only use it when I'm doing business activities. So obviously the business looks after that. And then that then gets me back then I've just started my investment. And I said, okay, that really makes sense. Because as long as you can identify the expense it is to do with the business, and you can quantify that or maybe qualify that, then you may be able to deduct that as an expense. Because does that also include with professional development? Suppose you want to train yourself to become a property investor, and at the beginning, obviously, you haven't got the money, but you borrow that money to yourself to kind of say, how would you be able to kind of justify?
Yeah, so with training expenses, it's kind of interesting because HMRC usually say that a training expense, especially where you're learning a new skill, is capital, so you don't get any tax relief for that. But the good thing about property is you don't actually need, there's no kind of formal requirement for training to become a property investor. So I view that, any property course you go on, that is a deductible expense. It'd be different if you were trying to become a gas registered engineer, and of course you've got to go through all the gas safe certification, that wouldn't be allowable. But for a property investor where you don't legally need to do anything, all of that is fully tax deductible. So if you were to go on, if you invested £5,000 or £10,000 in mentorship, that is an allowable expense of your company. So actually, as soon as you say you get your first couple of deals, you've got £10,000 worth of income. Well, actually, that expense that you've already incurred on that investment in the training is going to come off of that, so you won't pay any tax because you're going to get tax deduction for it.
Wow, that is a really, really likable moment to most of the listeners right now, because some people are struggling with that. Based on my experience and knowledge as well. So any meeting that you have with your coach or mentor or viewing properties, as far as I'm aware, that is tax deductible. Suppose you live in London and you're going to view properties, let's say in Liverpool, for example, and you're not gonna travel back. The accommodation cost is all tax deductible, if I'm not mistaken.
Yeah, so as long as there's kind of a element to, I guess, if you were to go to Liverpool, for instance, and you finished at 3 o'clock and you could come back, then HMRC would say, actually, you know what, you should have come back quite reasonable, so that hotel for the night. But then what you would do is actually do the full day, so finish at 3 or 4, then actually do some viewings and business activities the next morning.
Yeah.
And because you've got business either side, that hotel expense in the middle is tax deductible.
Fantastic. Okay, fine. Thanks very much for that. So let's talk about capital allowances. It has brought to our attention that if you set up an SA or you're setting up some properties, how are you able to claim capital allowances on that? Is that actually allowed?
Yeah, so there's a couple of different capital allowances. So especially the way that most people see it is kind of fixtures and fittings. So beds, TVs, all of that stuff, that is 100% tax deductible.
Okay.
And the best thing about service accommodation
is when you said tax deductible, do you mean expenses, right? It's recorded as an expense instead of capital.
Well, no. Yeah, so that's an interesting one, because it is still a capital item, but you get capital allowances on it. And the way most capital allowances work is you won't actually see the capital allowances in your accounts, just on the tax return. So if you've got, say, ordinary profits of £50,000, but you've invested £20,000 kitting out a couple of units, that £20,000 you'll get capital allowances on that. So it will come off of the 50, and you'll only end up paying tax on the 30.
Right. Okay. That makes perfect sense. And in that regards, then, do you have to own the property to be able to claim it? Suppose you're doing rent to rent, or it would be only the landlord who would be allowed to claim that.
So that's a good point, because what I'll do now is I'll look at the second type of capital allowances, and that's basically on integral features. So when you purchase it, all the kind of soffings, all the piping, the electrics, the toilets, basically when you purchase a property and use it as SA, typically it can be anywhere from 10 to 30% of the property value. You can pay capital allowances on that as well. So if you buy a property for £200,000, could be as much as £60,000, you get by way of this other capital allowance. And this one, because it has to be the owner who's doing it as service accommodation, because what will happen is, if a landlord who actually owns the unit, they rent it to you on a long-term tenancy, a 3, 4, 5 year fixed term tenancy. And what that does, that changes the supply. So that landlord over here, he's not doing service accommodation, he's not doing Airbnb, he's doing normal long-term rental. So actually he doesn't qualify for the capital allowance rules.
Good. Okay.
But if he had a management agreement in place, he was just managing the property for him, then he could claim it.
Really?
But that first type of capital allowances we spoke about, all about the beds, the fixtures, the TVs. If you're doing rent to rent, you will get them anyway. You don't have to be the legal owner for that.
Oh, I like that. That is a brilliant answer. I love that. I love that answer. Absolutely. So suppose now you bought a property, right? A derelict property that you need to bring back to life. You've got your kitchens, you've got your doors, you've got your architraves, you've got your kitchen, your bathroom. Can that be seen as an expense instead of instead of a capital expense?
So it depends. When it comes to repairs and capital, whether it's basically revenue expense or capital, it's the easiest way to put it was it there before? So say, for instance, you were replacing something, or you installing something, so it wasn't there. So you can't class it as a repair if it wasn't there beforehand. But small things such as putting architraves in, well, actually, that's not going to massively change what the property does. So that would always be pretty much a repair expense, which is the best way of doing it, because you get tax relief for that now against rental profits. If it's a capital expense, say, for instance, you move the kitchen around, put an extension on the back, That would be a capital expense because it wasn't there before. You've improved the asset. It does more than it did before. And you'll only get tax relief for that if and when you ever come to sell the property.
Right. Okay. Okay. So basically, you don't realize the gain at that point. You only realize it when you sell the property.
Yeah, that's right.
Fantastic. I like that answer. So so then in essence, your kitchen, your bathroom, all that is part of your repair cost, isn't it? So
as long as it was there before and it's basically of the same size, so especially with kitchens and bathrooms, if you were to say have a small kitchen, but then you kind of, you could put a much bigger kitchen in there. Well, actually, because the kitchen is bigger now, it's got more units, it's got more storage space. Well, actually, some of that kitchen replacement expense might be capital. So it's only generally an allowable repair expense when it's a like for like. So if you've got a kind of a 3-unit pedestal in the bathroom, you go in there, it's just outdated, put brand new ones in, that's a repair. But if you start to kind of go bigger and better, that's when you risk it being classified as a capital expense.
Wow. Okay, I like that. Thanks very much for answering that question. Let's talk about stamp duty tax.
Yeah.
Because there are ways that you might or might not pay for it. Could you guide us on that process?
Yeah, I suppose the first place I'll start is that most of the time you will be paying stamp duty. And I can't put the emphasis on that is because literally just last week we had one of our clients come to us who had been kind of duped by one of these stamp duty firms that you probably see a lot of people promoting on social media, these networking events.
That's exactly why I've asked this question.
Your property is uninhabitable, so we'll claim the 3% stamp duty back.
Yeah.
And then when I spoke to him, I actually know that if you could get a mortgage on it, then for sure it's habitable because that's what a mortgage is there for. So, and the trouble with these stamp duty claims is you claim now, you get your money back, then HMRC can, come to you 1, 2, 3, 4, 5 years time and challenge that claim. And by that time, the person who's taken a 25% fee for putting this claim in for you, they've disappeared. So you've got to pay all of that back plus interest as well. So for most people, you will have to pay it. But there are a few different quirks, and one of the most popular ones is the uninhabitable property. So if the property really is uninhabitable, and by that it's got to be more than just not having a kitchen or a bathroom. Ideally, you kind of want asbestos, you want leaking roofs, you want damp. It really got to be somewhere where no one would live in it at all. Not even a squatter wouldn't squat in it. If that's the case, then actually you don't have to pay the 3% higher rate stamp duty.
Okay, it makes sense because I had someone who's been into trouble doing this. Actually, he claimed it, but HMRC investigated, find out you're not going to tell them a leaking roof just because your roof is leaking, and the property was inhabitable. So it has to kind of be defined, which is a bit blurry as well. It's not that easy to define. But what you've just explained there. Obviously, like your damp, your asbestos, roof is not working, there's no bathroom, no kitchen, the property, nobody would live there, basically.
Yeah, right? One of the tribunal rules they mentioned, it's so bad that a squatter wouldn't squat there. Effectively, it's, the house is so bad, a homeless person would not want to sleep there for the night because actually they'd rather go somewhere else because it's that bad of a state. And that's really the barrier that we tend to recommend to clients to make sure you've got a solid case for uninhabitable property stamp duty relief.
Great, bro. I like that question. Thanks for answering that with us. So what advice would you have with someone who owns a property in a limited company, right? And he's bought this property and you want to do it as a serviced accommodation. What might be the best way to do that sort of thing?
Yeah, so in fact, even just on that, so if you're buying property to use as serviced accommodation, quite often the best way of owning that isn't even in a limited company. An LLP can be one of the best ways, especially if you've got multiple parties involved. And the reason for that is the capital allowances we just mentioned. So actually, with a limited company, you'll be paying corporation tax anywhere from 19 to 25%. And those capital allowances, where, say, for instance, you get 10 or 30% of the property value, you get that as a tax write-off. Well, actually, you're only going to save tax on that, the maximum corporation tax rate, so 25%. Whereas if you are owning the property for an LLP, that's taxed on you personally. So you can be paying tax at 20, 40 or 45%, which actually means that you will get tax relief on those capital allowances at a much higher rate, almost double. Almost double the kind of tax relief there, and that money's straight in your own pocket. Whereas with a limited company, you've got the capital allowances benefit from a corporation tax point of view, but you've still got to get the money out. So for most people, depending on where the source of funds is coming from, whether it's a trading business, that's when a limited company can be advantageous. But most of the time, service accommodation and LLP gives you the best tax result.
Wow. Okay, that's a good learning one for me there myself, which then drives me nicely talk about LLP, because that was going to be my next question. Americans are very big in LLP, but it's not as much as here it is in the UK. So would you be able to guide? I know you might not be able to answer the full question. What are the distinct identities for limited company and an LLP, and what are the advantages and disadvantages?
Yeah, so because with the LLPs, typically most accountancy firms, so the LLPs are still quite new. I think they were only introduced kind of early 2000s, and they're typically for kind of partnerships. And most accountancy firms, most solicitors firms, where you've got a lot of partners running the business, they're usually the people that make up the LLP, and that's kind of the bulk of that population. But the biggest difference from a tax point of view is basically how they're taxed. So a limited company, that will pay corporation tax on its profits at 19 to 25%. And then anything it transfers out of that as a salary or dividend to the directors or shareholders, that's a separate taxable event. You've got to pay income tax on that, potentially national insurance. Whereas with an LLP, it's tax transparent. So what will happen is if you've got an LLP that's made £100,000, two partners, each of those partners, depending on the profit sharing ratio, will get taxed on that £50,000 directly on their self-assessment. There's no opportunity to pay corporation tax or do anything else. It's, okay, you've got £50,000, you're paying tax on that in the tax year on your self-assessment.
Right, okay. So whereas if for a limited company, you only pay tax on the corporation tax, sorry, on your net profit. And then obviously if you are an employee of that company, you also get your income tax on your salary. As well as obviously your national insurance contribution as well. So that makes perfect sense. So that then gets me to ask a question. What is the most, or I'm not going to say the best, what is the best way to tax efficiently take money out of a company?
Yeah, so even now, I'd say when it comes from a kind of a cash point of view, it's still that classic kind of salary dividend mix for most people. The small salary, 12,570, anything over and above is dividends for most people. But if you're a property investor, you've got a large director's loan account, so you put a lot of money into your company and it owes it to you, you can actually charge interest on that loan. And that's a good way, that's a better way of doing it than taking a higher salary, because interest you pay, the interest doesn't have any national insurance on it. And that's still fully tax deductible in the company. You can receive that very tax efficiently. So if you do have a large director's own account balance, look at charging interest. Other ways to do this, so for instance, this, where we are now, home office. So this is where actually that's a great way to take even more money out, when a lot of people miss this because they think, oh, I'm just working from home, I'm paying these bills anyway, they come up my personal bank account. But what we do for a lot of our clients is we look at the amount of either rooms or square footage and say, actually, I'm here for business purposes, and then claim that as an expense. So that money will come out. Obviously, it goes towards the mortgage interest and the heating and the lighting for this, but it's a great extra bit of income it's tax-free to take it out. And you get the corporation tax relief in the company as well.
So basically, you can effectively rent that space to your company, right? Is that way?
Yeah, exactly that. This is an office. This isn't here for the fun of it. This is here for business to make money for JSM, and obviously HMRC gets some tax on that. So it's only fair that we claim the costs of this, all the variable costs, the heating, the water, the broadband, whatever it might be. It's only fair that we get tax relief on that as well.
So how are you able to distinguish that though? Because if you're living there, your home is also your person, or maybe your family, your wife, your children, or your partners, maybe using the facility. How are you able? Is there a guide on, or a limit on how much you could claim?
Yeah, so it's basically any way that you can reasonably calculate it. So it might be that you divide it by the number of rooms. So you get your total household bills, divide it by the number of rooms in the property, and if you use one of them for business 90% of the time, that's what you claim as an expense.
Right.
Or you could do it by square footage. As long as you've got some kind of just and reasonable basis for calculating it, HMRC tend to accept it.
Right. Okay. I like that. I like that answer as well. Brilliant. I'm loving this, bro. Seriously, I am. Interest on your director's loan.
Yeah.
So I know that is tax deductible on the company's perspective.
Yeah.
So how about you? How do you get that money as a director? Then on that interest, do you pay tax on that interest that you receive as a director?
Yeah, so pretty much most of the time you will, unless it falls within your personal allowance, the 12,570. And if you're a basic rate taxpayer, you've also got £1,000 a year tax-free income, interest income allowance. And then there's also a second one called the savings nil rate band, which also means that if the first 5,000 of your taxable income is interest income, it's kind of also tax-free. So if you take a lot of interest out of the business, that can be quite often just under 20,000, but I think it's about 17,000 or so it works out at. That's fully tax-free. Anything over and above that, you just pay 20% basic rate income tax on.
Yeah, based on your tax bracket, isn't it?
Yeah, that's right.
That'll be okay. Brilliant. I like that as well. So, in essence, then, because there's so many people that they are asset rich, they've invested all this money, but they don't really know how to get that money back. So, by charging interest on it, it's a very good way of doing it. There's another way. I can't remember how it was explained, where the company can lend you money, and then I can't remember the question, to be honest, but I read in a book called, is it Taxopedia, something like that? I can't remember the name of the book, but he explained it that way. Because I can't remember the question, I don't want to baffle you on that. So I like the way you've explained the interest part of it. Now let's talk about renovations.
Yeah.
These are the other questions that I tend to be asked a lot. You've got this VAT element on it, right? Some people say 20%, some people say 5%. So what is kind of the right answer to that?
It depends.
Yeah, okay.
Yes, that is, it depends on what the property is. So if you literally, there's a couple of different ways. So if you're doing a HMO refurb, that's 5% VAT. If you're doing a property where it's been empty for a long period of time, that's 5% VAT. But if you were just doing a normal refurb, you literally bought it from somebody who was living in it, most of the time, unless you're anything crazy, that's going to be just 20% standard rate of VAT. So it's HMOs, commercial conversions, empty properties where they've been empty for a long period of time. That's where you can get the benefit of the 5% VAT.
Wow, I like that. Thanks very much for sharing that with us. Floating company. What do you know about floating company?
Floating?
Yeah, floating company. Because I've heard someone talking about you can create a company that is not domiciled anywhere. I mean, I might have got that name wrong, where it helps you kind of not pay tax in different jurisdictions. Could you tell us a bit about that?
Yeah, definitely. So in terms of,
because I think you've got a video about that somewhere. I'm not sure if it was a reel or something like that.
Yeah, so especially kind of a lot of the time when people setting up companies, I guess a company's always got to be resident somewhere. So whether that's where the company's incorporated, so if you incorporate a company in the UK, Isle of Man, Jersey, Dubai, that's the kind of first stop of, okay, where the company's incorporated, where it's resident. And usually where a company's resident is where it will pay corporation tax. So there's a big difference, right? If you're going to be tax resident in the UK, pay up to 25%, or Isle of Man, Jersey, Dubai, where it could be 0%. So that's the first thing. But HMRC are clever. They know that, well, actually, you could just set up a company in Dubai, continue living it, especially in this internet age we live in. You can just do everything on your laptop. So they don't like that at all. And what they actually do is they look at this, it's called central management and control. And what they say is, where do the decisions take place in that business? Where does the growth happen? Who does this? And if that's somebody sitting at home in the UK, they'll actually override the kind of residency where it's incorporated and actually treat that business itself as if it's UK resident, like a normal UK limited company. Right. So they can work, but you've got to look at your personal tax residency. So if you're living in the UK, basically the UK, they don't want to lose out on its tax revenue. So they're really looking at this and they'll challenge it. Whereas if you're kind of traveling all over, going to Thailand, Dubai, Jersey, those revenue authorities, they're not interested in it. So you can benefit from the kind of floating company structure.
Nice. But how would you be able to create that? Because I might be interested in that, because it's really intriguing to know about that. So do you have to have it?
Yeah, it's only worth doing if you're going to become non-UK resident. That's the kind of thing that even probably countless times a week where I've set up a Dubai company, but I'm staying in the UK. And such a case of, well, you've just wasted your money effectively because you've got to declare this to HMRC. If you don't and they find out, the penalties could be as high as 200% of the tax that you've underpaid. So that's the first thing to mention, that you have to be willing to become a non-UK tax resident to benefit really from any kind of overseas company structure. But then, once you've done that, the mechanics of it are really easy. So what do? You go set up a Dubai company, set up a bank account, set up a Stripe account, money starts going to the business account overseas where it's tax-free, and then you can just transfer it out personally as a salary, as a dividend, depending on where you're based. And that's really kind of, it sounds like it could be quite complicated, but as a short summary, that is it. It's exactly the same as the UK, but not got HMRC hammering you every 10 minutes for their taxes.
Wow. That is a beautiful answer, bro. Dubai. There are lots of people forming companies in Dubai. You may have touched on to this as well. So you lived in Dubai, I think, for 8 months a year, aren't you? Or maybe more.
Yeah. Well, almost 2 years now.
Yeah. So is that your primary resident now, or is just you're going there for business purposes?
No, so absolutely. So in terms of the tax residency side of things, absolutely. Personal tax residency is based in Dubai, which means that I spend enough time in Dubai to be tax resident there. And got a small enough amount of time in the UK, so the UK don't deem me as a tax resident here.
Okay. So I know mainly you've touched onto the tax, but why lots of people are creating companies in Dubai? Why Dubai? Why not the Jerseys? Why not the other countries or say tax havens?
Yeah, a lot of it is just because Dubai is a great place to live. If you look at the other tax havens, Isle of Man, Jersey, Guernsey, I probably wouldn't want to live there. Depending on obviously the amount of tax, you might put up with it for a short amount of time. But that's what's so great about Dubai at the minute, is it's just the world's best tax haven, because I would probably live there even if it weren't for the taxes. Actually, it's so safe. When you're a business owner, you're networking with high-level people. You can actually walk around wearing a Rolex. Whereas you do that in the UK at the minute, chances are you're going to lose that somehow. So that's why a lot of people are focused on Dubai, and literally just the lifestyle benefits, and then the tax on top of it as well. For pretty much any business owner who can move, it absolutely makes sense to be based in Dubai, because you're going to have that better quality lifestyle and the tax benefits as well.
Wow, I like that. So I like the way you've kind of bring it. So some people, well, if you're wealthy, maybe expense is not your problem. But lots of people say Dubai is very expensive, like very expensive. So how are you how are these savings? How are you able to save that? How does it work for you when the country is so expensive?
Yeah, I'd say some things are expensive there, but then a lot of things there are actually cheaper than the UK. Fuel, for instance, a litre of petrol, I think it's about 60p. Car insurance is over there is a lot cheaper. I guess the main thing that's expensive over there, especially for a lot of people, is probably just living rental accommodation. That's where it's kind of London prices. So for me, I'm not anything crazily fancy over there, but I've got a 2-bedroom apartment, and all in that costs about 40 grand a year rent. So that's it's not a small amount of money. But the day-to-day living expenses, food, drink, it's not honestly too dissimilar to the UK. But that's where you can actually live in. There are cheap parts of Dubai where you could get a studio or 1 bed for £900 a month. So you can definitely. That's what I like about Dubai is, you can spend as much as you want, or you can. There are people that live in Dubai on less than £500-600 a month.
Wow. So in essence, then, it is a perception, then, no? Because people think it's expensive. Because I think it's expensive. That's what I thought. Yeah. So I do hear you. So thanks very much for sharing that with us. So well, Dubai would be one of the places where if you want to reduce your tax burden legally to form a company. I've heard about Jersey, and I've heard about another one. I can't remember the name of the country, which is also a good place to set up your company. So is there any huge difference between Dubai and those countries, apart from the lifestyle?
Not really. I guess it's just a case of, if you look at setting up a company, look at the corporation tax that applies to that business activity. But I guess the good thing about Jersey, Isle of Man, Guernsey is you're still in the Western world, you're still using kind of common law, Companies Act 2006. You can use banks that you're familiar with. So especially you've got HSBCs, Barclays, you've got your big banks there. So for people that are kind of thinking, oh, Dubai's a bit sketchy, I don't want to deal with kind of these Arabic banks, well, actually, that's the benefit that would bring.
Okay. How about the control? How about the government? How, I know I'm getting a bit into politics here because sometimes you think about it as an investor or as an entrepreneur. How are they involved in entrepreneurship? Is it kind of independent, like here in the UK, you can do whatever you want with your business as long as it's legal? Nobody's going to come literally hammering you down, saying what you do X, Y, Z. It's a democratic country, so to speak. You can do whatever you want legally.
Yeah, I suppose it's not democratic, but you can do whatever you want, pretty much, as long as it's legal. You've got the right trade permits. You can start a business. You can do, as long as it's legal, you've got the permits. You can do anything you want, and they actually encourage that. So especially the politics in Dubai, it's great. The ruler, he literally goes out. He goes to restaurants and will buy the whole restaurant. Anyone that's in the restaurant, he'll literally pay for their check for the whole restaurant. I've seen him do that on many different occasions.
Wow.
So it's a case of, and when he goes around, he doesn't have security because the people of Dubai like and love him so much, respect what he's done to the country, the jobs and opportunities created.
Wow.
He doesn't have to go around with 20, 30 police escorts.
Really?
Because it's a danger.
Wow. That is a different world that we're living in. We wouldn't have a politician, even an MP, walking down the city centre without having a police guard near him. Stuff like that. That's a massive contrast. Thinking about it. I remember when I was working, my manager asked my manager a question about Arab countries, because he's always worked in Arab countries.
Yeah.
I asked him, I remember vividly when I used to work in the city. He just came back to work in London, and I asked, back then there's so many negativities in the Arab country and all that sort of thing. So I asked him, I said, well, what is your perception? Because I know you've worked in Dubai for 15 years.
Yeah.
And he's worked in Iran for about 10 years. He works in Egypt for about 15 years. He's one of those elderly accountants. Yeah. He was my boss. He said to me, Rahim, one thing you should stop doing is to listening to the news, because all they talk is garbage. That's why he told me. He said, in his experience, the safest countries he's ever lived in the world are Arab countries.
Yeah.
So he gave me an example. He said, in Dubai, one, you don't lock your doors. You will leave your wallet inside your car unlocked.
Yeah.
Not to worry about someone nicking it. You'll drop your wallet in the city center. Someone will pick it up and follow you and hand it back to you.
That's what we do. So when you go to the food court, so loads of tables, massively busy place in the mall, you literally put your phone and wallet on the table and then go get your food and leave it there. And it's, people just, there's no...
That is crazy. I just can't believe it, man.
Yeah, it's just...
I just can't believe it. So when he told me that gets me start thinking, because I've got a different perception. I will never leave my car unlocked in London, right? Yeah. Not to say in car.
You can lock your car in London and they're still going to nick your car.
Exactly. They are even going to nick the whole car, aren't you? So I asked him about Iran, because I think that was something to do with Iran going on.
Yeah.
And he said, bro, I've told you about Dubai already, right? The same thing in Iran. The people are lovely.
Yeah.
The places are nice. The food is amazing. You're not worried about someone stealing your stuff. Everybody is nice. But maybe political side of things is not what you want to listen to.
Yeah.
Because what he told me was that these politicians are playing their own game. This is their own kind of field. But the actual normal people, the normal citizens, are very good people to surround themselves with. And that then gets me thinking as well, really and truly, if that's the truth, because I've never been in this country. I mean, I'm even fearful to kind of even go to Iran because of what I've heard in the news.
Yeah. That's basically all the Western world is. That's what they put out there, almost to kind of fearmonger and scare people. But actually, when you go there, you'll see it's completely different to what you expect on the news.
Wow, good. I know we are digressing there a little bit. So let's get to back where we're talking about. Let's talk about your success factor. In your experience, what are the key factors that contribute to success in your entrepreneurship? And especially for those people that are thinking you need lots of money to start business.
Yeah, I'd say it's just a case of, well, for one, staying motivated and doing what's required. A lot of people kind of say, oh yeah, I've tried my best, but actually it's a case of a lot of the time you need to realize if your best isn't good enough, you need to do what is good enough. So that's one thing to mention. And then look at just continuously kind of changing, pushing, and identifying opportunities.
Fantastic. So you are an author. You've written a book. What inspired you to write that book?
So writing that book was just a great way to get some great content, some massively kind of helpful, valuable content in front of a lot of people. So that's what kind of led me to write that book as well. You know what, need to get this out there. That book, I think, was sold, almost like kind of high thousands of copies of that. So it's just a case of actually knowing that a lot of people have read that book, they've utilized the tax savings, they're paying less in tax. So that was really the kind of motivating factor behind it.
Wow. What is the name of the book? What's the title?
So it is the Property Tax Handbook. Fantastic. This one, to be honest, I think it's about 2 years old now. I'm in the process of updating it and writing a second book as well. Okay. So especially with, we spoke a lot about service accommodation there. Well, actually, that's going to be the next book. So this is all about BRR and buy-to-let, normal property investment. The second book, we're going to update this one because obviously tax rates change each year. So a couple of numbers don't quite make complete sense with the latest changes. But that's what everyone get this because it will save you a lot of money in tax. And we will be releasing one for service accommodation probably early next year.
Fantastic. Share that link with me. Obviously, I'll be more than happy to put it on. And looking at AI, the world is moving so fast. COVID taught us a lot. What are your thoughts about AI?
Yeah, it's exciting and dangerous, I guess. But a lot of people, especially kind of you can see, especially with kind of marketing and how people are using it, that it's not going to take over the world just yet, because you can see when someone's written with AI and when they've not, quite a lot of the time. So especially Facebook posts, LinkedIn, everyone's just copy and pasting what ChatGPT throws up, and that's obvious. You can see that. But actually, what it can do is save you a lot of time when it comes to build it. I've helped it. It's literally built me website pages before, which would usually take me hours. It's literally done it within a couple of minutes. So that's where it's going to be powerful, and actually going to help you save a lot of time and work with you. So it's just a case of you focus on what you're really good at, that AI takes some of the legwork out of it. But yeah, it's amazing what has come up about it in a very short period of time.
Absolutely, because before I had this meeting, I had a test, right? I went to AI, I went to ChatGPT. I said, ChatGPT, I am interviewing Josh Tharby. He's this, is that. Could you tell me a bit about himself? Yeah. And also tell me what sort of questions I could ask a specialist like him. He literally came up with so many amazing questions, and some of them I just used. Like it naturally came up. I'm thinking, when you talk about the book, that's what I thought. I was thinking, what? Yeah. Because most of the things I'm doing now, because literally I'm asking you this, I've got that question written. It's naturally coming out of it. I'm thinking, it's like they know what sort of question I should ask and what answers you are going to give as well. It's absolutely crazy. As he said, it might be good or dangerous. People can take advantage of it. I can see how people can lose their jobs over this. But trust me, it makes the world so much easier. And we just have to embrace it. Make sure it works for us, not against us. So that's
it. You can either kind of sit there and kind of be scared of it and not do anything. Yeah. And ultimately, long term, you'll lose out, or actually kind of see, okay, how can I learn to use this to basically make money and grow? And then that's where you're going to come out on the better end of that.
Fantastic. Your future goals. What are your future goals in your entrepreneurial journey, and how do you plan to continue inspiring others in this field?
Yes, in terms of future goals, there's not really many kind of monetary goals that we really have now, especially the businesses. They pay more than enough where you don't really need to kind of worry about too much about money. Of course, I'd like a kind of massive super yacht or own my own private jet. So that would be nice at some point. But at the minute, it's all about helping people, making money and having fun. And a lot of people kind of put so much time and effort and dedicate their whole life to building a business, whereas actually forget to have that life, which is what's great about Dubai. You can go out, you can do things and have fun, because ultimately that's why everyone starts a business, to make money to live on.
I hear you.
A case of making sure that you do stay true to that and don't kind of sacrifice living at the expense of building your business. And that's exactly what I try to do, is spend a lot of time working, but just as much time having fun and enjoying life.
Yeah, and I can see that on your socials, bro. Absolutely. With your private business class and all that sort of thing. So yeah, we can see that, man. Keep it up going. Your enthusiasm and energy is what draws me to you a long time ago. What really keeps you going without losing your enthusiasm?
So to be honest, I do lose my enthusiasm sometimes. Of course, you don't see it because social media, you only ever see the good stuff.
Yeah.
But it's just a case of actually realizing you want, this business isn't a sprint, it's a marathon. So it's just a case of continue moving forward. Even if some days I wake up really, really enthusiastic, ready to kind of smash it. Some days it's like, I can't really be bothered, but you've got to do what you've got to do anyway. And that's it. It's just doing what you've got to do, even though you don't feel like it.
Absolutely.
And
we are.
the biggest thing.
Yeah, we are. We are not robots, aren't we? So sometimes you're happy, sometimes you're not that happy, but sometimes you're motivated, energized. Obviously, if you're always energized, then there's something wrong with you, right? You talked about hard time. I'm definitely inspired by someone who overcome hard time. Do you mind sharing a time or event that was really hard for you and how you overcame it?
Yeah, to be fair, there probably isn't like a single event where they were kind of overcome. Yeah, it's probably not one kind of single event I can think of. Well,
yeah, don't worry about that. It's fine. Quick fire round question. We're nearly at the end. These are short, crispy questions. Answer them that way. This is just to kind of get us going. What's advice you remember receiving?
I guess go to school, get a job, get a mortgage, get married, settle down.
Best advice you remember receiving?
Rather than focusing on kind of how you're going to do something, focus on who will do something. So it's important when growing a business, basically, rather than thinking, okay, how am I going to solve that problem? Start to think personnel, who can I get to solve that problem for me?
Fantastic. I like that. Your biggest regret?
I don't have any regrets. Yeah, no regrets.
Is there something you believe that lots of people disagree with?
Probably not. I guess no, maybe not. But paying taxes, yeah, you shouldn't pay taxes. Yeah, that was a good one. A lot of people give me abuse for that, saying, "Oh, you should pay taxes." So yeah, you should absolutely try and minimize your taxes where possible.
What is the best book you've ever read or listened to?
So 4 Hour Work Week is probably one of the best books I've read. That was one of the eye openers. So yeah, definitely go for that.
Does money change you?
It doesn't change you, but it kind of allows you to be who you are and amplify that. So it doesn't actually change, fundamentally, if you're a dickhead, you can just be a dickhead with money. And that's where, because you're doing it a bit extravagantly, people will notice it, but it doesn't change you, I'd say.
Does money make you happy?
It doesn't make you happy, but it allows you to do things that do make you happy. So you're obviously worrying about money, driving a rubbish car, having to go to work, those things make you unhappy. Whereas having money alleviates that, so it contributes to making you happy.
Is there something you used to strongly believe you recently changed your mind on?
No, nothing.
Is there something in the world you fundamentally think is wrong and you like to change?
No, it's things like that. I don't think about it. I just focus on business.
Fantastic. I love that, bro. This podcast is called Property Investment Blueprint Podcast. What does investment blueprints means to you?
So yeah, investment for me is all about basically for the long term, passive, ideally. You get that strong capital growth. It's going to be for generations, generational wealth. So what we're doing today is for the children, the children's children, and what we're building. And that's why I love property as an investment, because it allows you to do that.
Fantastic. Final question, bro. If there's only one person you'd love me to interview, who would that person be and why?
I suppose probably Alex or Mosey. He's just killing it at the minute. He's the absolute GOAT. So yeah.
He's crazy. He's crazy.
Yeah, that's literally the only way to describe him.
Yeah, he's one of those ones up there. I love him. I love him to bit. What an amazing way to end this. It was a great special moment. We've never had a tax accountant in the podcast. This is going to be an absolutely amazing pod. The questions, the answers, you absolutely nailed it. So if someone is interested in joining your program or becoming a client, how will they contact you, and where should we follow you, and where are you hanging out on social media?
Yeah, so best place is to go to jsmtax.com. Anyway, we can help you there. You can book a call on the sales team, and we'll definitely look after you. But other than that, all social media, it's just at Joshua Tharby. Instagram and YouTube are probably the two best places to consume content, learn how to save tax, and get value.
Fantastic. So if you've got any of those links, feel free to send them over to us as well. We will put them on the pod. Yeah, Josh, thank you so much for your inspiration. Thank you for educating us, helping people transform their life through tax and properties. Thank you for being here. We really, really appreciate you.
Absolutely, my pleasure. Thanks for having me.
Thank you.